Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for joining us.
Good afternoon.
Well, let's start with Wall Street, where we saw a bit of a retreat from the big gains earlier this week. We're coming up on some inflation data, so there's that. Shares of Tesla in particular were down 6% to just barely above $1,000. What's the story in the global markets?
Yes, if you look at the U.S. market, it shows quite a bit of volatility at the current point in time. If you look at the Dow Jones, it was slightly up, but as far as S&P and NASDAQ is concerned, we're down by 0.7% and 1.7% respectively, as the consumer discretionary and the real estate stocks weigh on the indexes. If you look at the overall market, it showed 3 days winning streak right before the yesterday's close, going down by that much. It's related to the new COVID variant and how that will play out in terms of the economic growth rate. And also, if you look at the U.S. inflation data, which is coming out tonight, and most of the people are quite concerned about that. And if the inflation pressures are too high, then there's possibility that the Fed might pace up the pace of tapering next week. Right now, they're talking about 150 billion, but they might add it by double, so about 300 billion or so. So if that case happens, then there's possibility the interest rate hike might happen faster than expected, and that that creates a bit of a concern about the overall market. However, though, if you look at the overall jobless claims, it came down at 52 years low, which means that the overall employments are improving. Overall, the consumer side will be showing the relatively good numbers in terms of the growth rate, in terms of consumption. So there's a mixed signature coming through between overall interest rate environment versus the economic growth rate. So therefore, we think that the volatility might continue to happen until the FOMC meeting, which is happening next week sometime.
Well, today Korean stocks were down too, but the KOSPI staying above 3,000 points, a key benchmark. Again, not a good day for shares of the big chip makers, which haven't really had a great year either. Tell us about the domestic market.
Right. KOSPI was down slightly. Well, it was down by about 0.64%, and the KOSDAQ was down by 1.1%. Most of that decline was coming from overall net selling by the foreign investors. However, that they are the net buyer of the futures market. And if you look at the December numbers, as you know, the KOSPI is doing quite well relative to the lowest point, which was the end of November. We do see that foreign investors are continuing to be an overall net buyer of the Korean market. And yes, there's been concern about the semiconductor indexes, but nevertheless, we think the earnings numbers should be reasonably good going forward. Therefore, we do expect that Korean market will be in a good position for year end and then maybe the next year. All in all, we are looking at some of the earnings growth rate happening for quite a bit of sector, particularly IT-related sector, and also the with Corona sectors such as airlines and etc. Overall consumption numbers are expected to be timid, but nevertheless, we think that the export numbers should remain to be quite strong. So therefore, the Korean equity market, as of today, there's been a bit of correction, but going towards the next week, we think that after the FOMC meeting, there's good position to recover further and maybe sustain well above 3,000 index territories for KOSPI.
And if we could talk real estate for a minute, Mr. Yu, the new data shows that the supply of long-term leased apartments in the Seoul area now outstrips demand for them. This is a system called Jeonse, of course, where people make large deposits instead of paying monthly rent. This seems to be connected to government policy, and it leaves more landlords looking for tenants. Tell us what's happening in the property market.
Yes, if you look at the overall landlord sales, overall, in terms of the price trend, it seems that maybe there's indication that the prices might be coming down for the Korean property market. it is found that more landlords for sales than demand for the Jeonse in Seoul. It seems that that means that a possibility of price decline might be happening in the future. As you know, the Korean government have been heavily regulating in related to the property market, and probably right after the election, we do think that there might be additional quite a bit of a supply coming through. And if that's the case, we think that overall property prices can be reasonably controlled. Right now, if you look at the overall Korea's real estate market, it's been rising quite rapidly upon the heavy overall debt to equity ratios, particularly consumer debt as a percent of GDP, has reached well above 100%. That's been a concern. And as you know, the Korean government's been trying to control the property prices by raising interest rate and various other measures of regulatory environment. We do think that it is coming to a certain effect with this kind of trend that we see here. I think the supply will be coming in gradually, and therefore the prices might be coming down gradually. But nevertheless, I think that it is possible that price has peaked already.
Well, finally, zooming out a bit, Mr. Yu, data show that Korea's population this year, including citizens and foreigners, will have declined for the first time. And with fewer people to work, some are even saying that by the end of this decade, the Korean economy might not be growing at all. What effect do you see demographic change having on the local economy?
Right. Clearly, the birth rate in Korea has been one of the lowest amongst all the OECD countries. If you look at the South Korea's total population, including non-Korean residing in the country, it is expected to fall for the first time this year. And they're saying that it might fall at this kind of speed at 37 million by 2070, nearly falling by 30% off from the current level, according to the National Statistics Office. The Statistics Korea on Thursday projected that total population would drop by 90,000 to 51.84 million this year from 51.75 million last year, owing to fewer foreign additions amid the pandemic level. The one way to solve the problem with the low birth rate is trying to bring in more foreign individuals into Korea and creating the job positions for overall Korean overall economic market. We think that that can be happen once these COVID-19 issues pass. But for the time being, there's a bit of a concern, of course, with the continuous decline that's happening here. As far as looking into long-term picture, if you look at the overall population decline, that is definitely negative news for the property market prices as well as the overall economic growth rate perspective. And so therefore, that's the concern. However, though, on a overall regulatory environment, we think that the government will be coming out with more boosting measures and trying to provide some of the benefits for having more children on their family. So all in all, we will look into how that would change. But for the time being, this is a bit of a troublesome news.
Indeed. All right, Mr. Yu, we'll have to leave it there for today. Thank you for sharing your time with us. We always appreciate it. Have a great weekend.
Thank you very much. You too.